So yeah, we can just get right into it, Jay. I know Robinhood, we got in, I think it was 2 days ago at $20.90. We had a little bit of a drop off today. I think as low as $20.17. I heard a little bit of panic in the discourse. I'm just curious, what are you thinking here about Robinhood? Obviously, we haven't hit our stop loss yet. This is a swing trade, so I'm personally not worried, but I think people will get a little bit more comfortable if they hear it coming from you.
Good. Well, I don't think that there's any reason or a cause for concern for two reasons. One, the trade isn't invalidated yet because we haven't hit our stop loss yet. And two, even if we would hit our stop loss, then I very much would struggle to see how that's a problem because we've even added the position sizing aspect to it. So if you are following us, then you're risking 1% on that trade. And if we do get stopped out, and this is the first thing that I kind of want to address, if we get stopped out, chances are that a lot of stocks are going to drop off a lot, and that some of our entries from lower down are probably going to hit their entry conditions. So that's maybe Palantir. We'll go over that later. But so far for Robinhood, if I'm just looking at this from a zoomed out perspective, and even then just zooming in locally, we're still very much making an uptrend. So if I mark that out, we've got that cup and handle pattern here, but more important than that is the fact that we're locally making higher highs and higher lows. Now, that is going to change only if price actually gets below $19.07. But I understand that our stop loss, like that's a bit far away from current price, and we are working with a stop loss at 19.59. So we're not necessarily holding it down all the way to 19.07, but technically it would be fine still for price to hold anything above that. Now, 19.59, I'm just going to mark out that level. That's our red line, that's our stop loss. Now, so once again, I'm looking at this. This is a very big, scary candle, minus 5% here. But you got to remember that before we recently made a top, right? We dropped down 16%, and then a little bit later on down the line, we dropped down 10%. And every time we're still making higher highs. And now we're dropped again 9.6%. So we even have some room left for Robinhood to come lower. And this is the first thing that I would address is there's a reason why the stop loss is 19.59 and not $20 or not 19.9. Why is that? Well, because it's even somewhat likely that we would come down lower. Now, we don't want to add to our position. That's not the goal at all. We just need to be aware that we got a slight little area in there where it would make sense for price to come back down to basically sweep everybody with stop losses below $20. Hopefully it does that and then creeps back up. Now, that 20.9 level is obviously a very important level. We hit it as resistance and we broke it, we held on top of it, and now we're back below that level. But as long as our stop loss isn't hit, I still think that it's more likely for Robinhood to hit our first target at least at 23.74. Because this week we've also made a new higher high. So technically this is perfect, right? An uptrend consists of higher highs and higher lows. So from all these highs to these lows, those are shakeouts, right? 17%, 10%, maybe another 10% shakeout. But as long as we're generally at the right side of the market, there's no problem. And if the market, right, for people that are concerned that the market would drop down way lower, that's exactly why we do have a stop loss, is because if we do hit our stop loss and if we do get back and test all of these levels into resistance, then yes, then there is a good chance that we come back down maybe to $15.65, but we'll readdress that. So as long as our stop loss hasn't hit, I really think that we shouldn't jump to any conclusions and just kind of sit it out, wait it out. And honestly speaking, this is the exact reason why the market is coming down. It's coming down to make sure that people who are oversized or over leveraged or who have way too much position size going on in their long position, they get so scared and they cannot bear that little drawdown. So they get out of the position just before that market just continues with the trend. Now, again, if we do lose $19.07, get below that level, then I think we could potentially look for Robinhood to come down potentially way lower again. But that is not the main scenario. So let's just stick with the bullish thesis. And if this gets the stop loss hits, we'll just like readdress and reassess. Very important. Once that stop loss hit, we're not going to do anything. It's not that we're going to say, oh, stop loss hit, let's immediately take a position again. So then probably, like I said, charts are going to come down lower in general, and we'll get some of our entries maybe on Palantir. So that could be the next one that we can go over. So I wish I could give you like a more elaborate update, but there's really nothing to say apart from we haven't hit our stop loss and we're on track to our higher high at 23.74.
No,
And
that was a perfect update.
this is also what separates, well, people that generally then do well in the market consistently from people who are still struggling a little bit. Like one of the key features is that you need to allow your trade to go to your stop loss. And when that stop loss hit, you're also completely fine with that because you're not wishing that, oh, this Robinhood trade here is now what is going to double our $500 account. No, not at all. We're looking for a decent risk reward play. So if we just once again go over the fact that we've entered at 20.9, right? Stop loss 19.59, and then a target at 23.74. That is more than a 2-to-1 risk reward trade. So hypothetically, we stop out and the next position that we enter hits the target, we will have made back our loss and we will be on track to be profitable again. So I would say there's no reason to panic or worry. This is very, very normal.
And that right there is exactly that's exactly what we're looking for. Like just a quick update to see, like is it panic time or are we good? And it sounds like we are still good as far as this current trade goes, and as far as the analysis goes. You did mention PLTR Palantir. I know for that trade we were waiting for the price to break below $17.25, followed by a 4-hour candle close, targets at 22 with a stop loss at 15.50. I know recently Palantir just had that which I know you don't follow the news as much, but they just had that big $480 million army contract. Everyone's talking bullish about Palantir. I remember you at one point were saying something about a possible bull trap. So I'm curious to see what your opinion is here.
So I think that Palantir is also just like Robinhood in an uptrend. However, I think that the uptrend on Robinhood and the targets are more realistic than something like Palantir. I think that even though this is bullish, the way that we have gone up here, right? So if I add in a very simple indicator for a second, the volume, let's see, visible range volume profile, that shows me basically big areas, mountains in the chart, and also gaps. So all these gaps that it's very easy to move back down. Now, if I even just remove that, to me, it doesn't look like I want to now enter a long position on Palantir. And the main reason for that is because, well, we've now recently again made a higher high, but it could come down lower. And if we enter a position long, say we enter a position long here right now, and we're already in our Robinhood long as well, say the market comes down, now we are in two losing trades. And if we are careful, right, if the market goes up, well, Robinhood is probably going to do well, and I think outperform Palantir percentage, well, potentially. But if it comes down, well, maybe we get stopped out of one trade, but we get our optimal entry lower down for Palantir. So again, like huge candles like this, 43% this week. Yes, that's a very bullish candle, but ultimately we have not really gone up from there. So if we're not going higher, it's typically because we need to go lower again. So this is kind of 16 weeks of Palantir not going anywhere. That's 4 months. I know that this is a fan favorite, and I do think that this goes back to the all-time highs, but I would not be surprised for this thing to correct back down. Now, if this thing corrects down 20%, yes, that's likely going to mean that Robinhood gets stopped out. But remember, it's important then not to have too many positions that go in the same direction all at once. So the fact that we're looking lower down for Palantir is basically also to protect us from potential market downside. Now, I do want to re-emphasize why I think 1724 or 1725 is such an important level. So if I'm just zooming out here, and I'll make it more obvious with just one horizontal level right there. So you see in May of 2021, that was a level of support where we've wicked. and then went significantly higher. Then ultimately we got below that level and turned that level into resistance, and we stayed below that level for a very long period of time. So once we broke below 1725, it wasn't really until 567 days later that we got back above that level. Now, recently we've broken significantly above that level, but we've not necessarily tested this level maybe enough to confirm it as support. So that is a huge key level from the past where I would imagine that maybe we get there again, and then we continue with the bigger picture uptrend for Palantir. And if we do go up from here, I mean, that's fine. Like I said, then there's no need to be overly exposed in long positions. That's risky. Next week, we also got a lot of like at least market moving events coming, which I'm not interested in the results of these events themselves, but I know that that's going to cause a lot of volatility regardless. So Palantir, I would say this is actually rejecting from a key level. So 22.29, that's the support up there. And then we've rested on that level and we broke below it. And to me, it seems like this week we've basically run shy of that level. And this looks like a high and a lower high, and potentially here locally another lower high before making our way down to our level of interest and maybe holding there. Now, this is something like I don't have this in my portfolio because I don't even think that it's all too unlikely, actually, that Palantir potentially goes down lower and tests the 13.56 level again. I really think that that is within the realm of possibilities because I know that a lot of people are overly long on this with stop losses all below these lows. And it, again, by the time that Palantir, say, goes to $13.56, that would imply a 37% drop. Now, that is not, I'm not alerting any shorts here, not at all. Like, that's not our interest here. We're just looking for the long options. But you would want to be at least like making sure that you're prepared for that if it happens. So that's what I have to say about Palantir. I think 1724, yep, that's that first level. And then if it does go lower just by looking at the chart, I would say 1356 is going to be the next level of interest. You really cannot rule anything out. And just so price has gone from these levels all the way to $6 before. So while you're up here, you need to be way more cautious than while you're down here, of course. When the market has just sold off and is going sideways, it's relatively speaking way safer than after having pumped. Let's see. So from the bottom, we've went up 364% for a stock. That is significant. And we're still up 260% from that bottom. So even if we come down to test 1724 there, we would still be up almost 200% from the bottom. That is not too unrealistic, right? I really think that this is not the area where I want to go long. And if you notice, like the price action here on Palantir, if I kind of quickly show you two things side by side. So the reason why we are long on Robinhood and not on Palantir here, if we have to choose one, is because Palantir has essentially made a top, a high in March, and it's come down and it's made a lower high. If you see Robinhood here, this has made a new high, well, basically this week. So this is going up the last weeks, and this is going down the last weeks. So this is where the strength is. Now, I want to see if I can do potentially something interesting here with the overlaying for a moment the Robinhood symbol on this chart. Let me see if I can get it in better. Right. Okay, good. So the Robinhood chart is basically represented here on my chart. You have the Palantir chart on the candlesticks, and then you have, relatively speaking, the Robinhood chart. Now, if I'm looking and zooming in locally here to what these last few weeks have done, I can clearly see that, well, if this is the Robinhood chart, right, the orange line made a high and then came down and then made a low here, and now is going up and is basically curling up. That means this move here means that over the last few weeks, Robinhood is the outperformer to Palantir. And if I'm looking at the Robinhood chart, it basically hasn't put in that much of a significant move after our reaccumulation range. So in some sense, you could say that Palantir is already a little bit further ahead, and that the targets for Palantir, if I was long, right, I would have been taking profit here on Palantir, and I would be looking for a re-entry lower down. But for Robinhood, those same kind of levels that I'm looking at are not necessarily hit yet. So that's the whole reason behind being long Robinhood and being okay with that, but not necessarily wanting to add Palantir, at least from here. So again, I think that could be indeed potentially a bull trap, and I don't want to be a part of it, of course.
Yeah, no, that's honestly just even hearing hearing the reasoning behind the analysis is super huge just for people who are getting involved to, understand why they themselves may or may not want to get involved in
Yeah.
certain ways.
And
And
by
yeah,
no means is this like perfect. I don't want to say like, oh, this is exactly how it is. Like, I mean, by all means, you got to do your own research. I'm just telling you how I see it on the charts, but that's not a reason to just like blindly follow us, right? You got to
right.
be on board with the why or have your own reasonings.
Yeah, I know we
This
only
can
have a few.
help, of course.
Yes, definitely. I know we only have a few more minutes. Is there any way that we can get maybe just
Yeah.
one more stop for the watch list? Is there any in particular that you want to go over?
Um, I was looking at Under Armour here. Did we talk about this last week? Did
No,
we talk about UA already? Well, this is a
UA.
stock that, yeah, it's currently trading at $6.94, right? And I actually think that this is a bullish move this week and that probably we can continue this up now. I would have to check here for a second what the targets are. Um, so I am thinking to myself, just for a second here, if we even just go long, again, don't do it yet, but I'm just kind of mapping it out if it makes sense here from a risk reward perspective, what I'd be looking at. Not
Where the magic
really.
happens.
This would make sense. Like again, this is a rather risky play, but I'm fine with it. That is to take a position here for Under Armour with an entry at 694 and to put your stop loss at 617 and to have your first target at 868. And then the second target that can be at 25% of the position and that can be targeted to 10.56. So entry 694 here, stop loss 617, so giving it some room to 617, and then targeting to 868 and then 1056. That's really my idea on Under Armour. This
And
is one of the
for
stocks that is looking quite okay. And if it does hit that stop loss, then it's very likely going way lower. So then we would want to be out anyways. Now, this is an 11.22% stop loss. So let's just do 100 divided by 11.22. So that is, let's say, 9% of the account. So if 500, so we're working with a $500 account size, right?
yeah,
So 1% is $5. 5 times 9 is 45. So if we divide 45 by 6.94, that would be equate to, well, essentially 6.5 shares on UA. So 6.5 shares, that's also what you could be taking right now, Doug, to risk a 1% on your portfolio, at least $5 there.
sorry, you said 694 entry. Is that just like basically just entering at a
Basically entering here and now, because this is something that is looking bullish to me based on the weekly time frame. I would expect that maybe we can come down, but ultimately that looks like I played it out. I'm personally going to take that as well. Yeah.
right. So there's no like waiting for a candle close, anything. You just take the play
No.
basically,
Yeah.
nowish or whatever, and then
Yeah.
ooh,
Yeah.
perfect. Yeah, that
That's
makes
essentially the play there. Yeah. Yeah.
even easier.
Dude, so just a quick recap. No panic on Robinhood, no
Yeah.
entry on Palantir, and Under Armour looks good for a position right now. So with the preset stop loss, of course.